Hello and welcome. We have an exciting session coming up today. Today we have Emma Fabbro, who is the founder of her practice, Fusion Accountants. Based in Adelaide, she's focused on supporting micro and small businesses, helping them to understand their numbers and their tax obligations. She's well recognized in her field, as one of the top 50 pro advisors for 2025. Please welcome Emma to our virtual stage. Emma, take it away.
Thank you, Christine. It is my pleasure to be here today with you on one of our end of financial year webinars, Workload to Workflow. Today, we're talking about pricing, fees, and profitability. So all things that we really enjoy talking about. Before I get started today, a little bit of housekeeping. So this session today is being recorded, and anyone who is registered will get a recording after the session. Please ask any questions using the question box on the right-hand side and leave event format for us in the survey form. If you do have any technical difficulties, please restart or refresh your browser if you can't see or hear the presentation. Also, heads up, maximize the screen to see the demo at the best capacity. So jumping into our presentation, as Christine said, my name is Emma Fabbro. It's my great pleasure to be here today with you for part of this end of financial year webinar series. So what I will be talking about today, we are talking specifically about the importance of reviewing our pricing. We're talking about industry trends and challenges. We're talking about comparing to industry benchmarks. So incredibly important that we know what our competitors, what our peers are doing. Practical steps for reviewing pricing, effective end-of-year planning, and communicating pricing changes. And that may be one of the most important things that we're talking about today in terms of communicating those pricing changes back to our clients. So the importance of reviewing pricing. So even without going further than this slide, we know that we're in a cost of living crisis. We've got rises all above the board for every expense that we have, whether it's individual or business or a combination of. So it's important as business owners and as practitioners that we take stock and review our own pricing. So why do we need to review our pricing right now? So the costs of doing business are increasing. So like I said, we've got CPI increases. We've got scope creep. We've got firms that are increasing pricing and subscriptions, etc. Things that are increasing in the background. So small or modest increases since COVID. And since COVID and even before COVID, we are very much subscription-based businesses. So we've seen those incremental price increases in the background, and they're starting to catch up with us. And leading on from that, that scope creep is eroding our profits. So I'm sure that you're probably like myself in my practice where we've got our client on X number of dollars and we've seen 1, 2, 3 price increases and we haven't yet increased the price to our client. So that scope creep is really eroding the profits that we're actually making for that client and or clients. And the next one, kindness is crawling profits. So it goes without saying that it's incredibly hard to take stock and to actually be able to be proactive, make those steps, and need to recognize that we need to be profitable in our businesses. It's time to be more strategic and more commercial. And so when we think about it, we are in business to be profitable. We need to make profits in our own businesses. The final thing here, our clients are expecting new proposals and new fees. And this one here, when I talk to advisors, it's an interesting conversation because sometimes we have clients that we have on these legacy prices and we keep them on the same price from year to year to year. But guess what? Our clients don't expect that. Our clients actually think that our fees are going to be increased. They expect to have higher fees on a year-to-year basis. So let's have a look here at some statistics that will give us some confidence in terms of re-engaging and resetting those pricing conversations. So the March 2025 CPI rose by 0.9%. So that's an annual increase for the previous 12 months of 2.4%. The national minimum wage from the 1st of July 2025 will increase by 3.4%. So even those two statistics in themselves are greater than 5%. And when we take stock of that and we think about our practice, we think about wages that we're paying, we think about general fees and subscriptions, etc., that we're paying. And we need to take that into account when we're looking at our engagements from 1st of July 2025 onwards. So staff are going to anticipate salary adjustments to meet the additional cost of living pressures. So that CPI, our staff are expecting that we're going to pay them a little bit more because everything costs a little bit more. The other thing, a legislated change, we've got the super guarantee from the 1st of July 2025. That is going up to 12% for every employee that we have on our books. So let's have a look at some industry trends and some challenges that we have within our practice. So this is what I'm seeing and what I'm hearing. So things that are declining practice profits, things that are eroding our profit margins, increased costs. So we've just talked about CPI, increased subscriptions, cost of living in general, but also the increasing cost of things like wages and super. So increasing costs, competitive markets. So there's a lot of us out there and it should not ever, ever, ever be a race to the bottom. But we do see those accountants out there, or those advisors who are offering bottom line cut price services. So a fee resistance from clients. So clients who just don't want to engage with us unless we are just a little bit lower than what we would like to be charging them. So a failure to adjust prices, and also that scope creep. So again, we're talking about where we've engaged those clients and we've engaged them for services A, B, C, but throughout the year, we've ended up providing them with not just A, B, C, but also B, C, D, D, or D, E, F as well. And so we ended up with those extra services that we're giving them, and we're not charging them appropriately for them. The other sorts of things that we're talking about in our industry, the talent shortage. So we know that there is a shortage now of BAS agents, of accountants, of bookkeepers. So how are we able to attract and retain staff within our practice where we need to have employees? And wage demands are high. And not only the wage, as we talked about and as we've seen, super is now increasing. It has been increasing for the previous several years as well. The other sorts of things that I want to talk about here are increasing levels of burnout. So affecting our productivity and our job satisfaction. And whether it's ourselves as sole practitioners or our staff, but at the end of the day, if we're not satisfied in our job, we're probably not going to be productive. And that again has an onset flow on to our clients and the client work that we're doing. And so quitting or quiet quitting. And again, so people who are just leaving the industry, who are just not happy and not able to stay in the industry that we are in. So let's take a look at what our peers then are doing. So 55%, and these are statistics that are across the industry, 55% plan to increase prices across the board. So that's a really, really good in itself, a really good statistic to take stock of. 74% plan to increase BAS prices. So when we think about what we are charging in our practice for a BAS return, and we think that 3 in 4 of our peers are going to increase those prices in the next financial year to come. 81% plan to increase the basic price of an individual tax return. And I've spoke to many tax agents who do not want to offer services for individual tax returns because they don't see it as a profitable area. So it's interesting there to think about that and reflect on how that might affect you and your business. And 87% plan to increase the price of company and trust, financial statements, and individual tax returns. So a lot of increases there across the board in terms of what our peers are talking about doing for the next 25-26 financial year to come. So let's have a look then at some industry benchmarks, and let's actually compare to some industry benchmarks as to what is happening at in the industry level. So in terms of BAS pricing, so the average firm in terms of preparing a BAS return, 2016, the average price of a BAS was about $385. So pivot to 2024, and the average return, the average price of an individual tax return was $470, adjusted for CPI. In 2024, the average price in terms of an individual tax return, they're looking at $495. So when we look at some statistics here for the average price of a BAS return on a national basis, so we're looking at what does the firm charge for an average BAS, and remembering that our business activity statements, our BAS could be very different for different businesses, etc. But what is the average price for a trading entity with good record keeping? So 8.5% are looking at charging more than $450 for those BAS returns. 21.8% are charging between $350 and $450 for each business activity statement. And you can see there, the average price is the 44.2% are falling within $250 to $350 for every business activity statement that they're preparing. The other end of that is that we've got $150 to $250, 24.2% are charging that amount. And then we've got a very, very small portion who are charging less than $150. So this is a really, really good time for us to take stock as to what it is that we are charging and whether it is that we should be recharging, resetting our pricing for the next financial year to come. Now, these statistics in particular, I've derived from the Ignition 2025 Tax and Compliance Pricing Benchmark Report. So you can deep dive into that report yourself and have a look at some of the many statistics that are in that report and how they link back into you and your practice and what rates you are charging. So let's now have a look at basic individual tax return pricing. So we're looking at the top there, 2024 basic individual tax returns, anything from $110 to $400. And it's a really, really interesting thing. I often get clients or potential clients that call me and say, what will it cost for an individual tax return? Well, we like to say as advisors, how long is a piece of string? So an individual tax return can be quite basic. It can be more complex. It can be many different elements involved. But the benchmark there, $110 to $400. 2025. So I'm estimating in this scenario here that returns will be anything from $180 to $320 for a basic tax return. And so looking at some stats here for average individual tax returns, from 2016, the average price of a basic individual tax return was about $180. And in 2025, we're looking at that being about a little bit like $230 with the CPI adjustment. But if we look at some industry benchmarks that we should be perhaps following, perhaps we should be looking at more like $285 as an average for those basic individual returns. So looking now back at some BAS returns nationally. So again, a little bit of some statistics here on across the benchmark, across the board. So what we've got here, and again, we're going into that ignition, the tax and compliance pricing benchmark. So I would encourage you to grab that resource, the 2025 tax and compliance pricing benchmark from Ignition. You can get that on the web. So BAS returns greater than $300, just over 25% are charging more than $300. We've got about another 25% who are charging between $250 and $300. So more than half the number of BAS returns being prepared are being charged at more than $250 per BAS return. We've then got a large chunk that is sitting within that $200 to $250 price range. So we've got just under 30%, 29.1% there. And we've got a further 16.4% that are sitting within that $150 to $200 benchmark. And you can see then a couple of little outliers there where we're charging less than $250 or not even on the service offering. So let's pivot now and look at some practical steps for reviewing our pricing. So looking at some starting points when we are repricing. So a few different dot points here. We want to determine our remuneration requirements. So what is it that we need in our practice to be profitable, to make a profit? And remembering that we're in business to make profit just as our clients are as well. We need to estimate our staff costs, so whether we're onshoring or offshoring, but we need to look at what those costs are in terms of our staffing requirements for different clients and different jobs. We need to prepare a budget that covers our overhead costs. So remembering that we've got a lot of fixed costs in our practice and costs that we're going to incur, whether we're in business and making revenue or we're not. So we need to obviously be able to meet those costs. So are we including a buffer? So how much above those fixed costs are we including? And the other point here, calculating your required turnover in terms of budget. And so I want to make another point here, and it was a conversation I was having just recently with another QuickBooks Pro advisor, and they were talking about a client that they had engaged. And when they engaged that client had a business who had a staff, and they were offering payroll as a service, and they were charging for payroll as a service. That business had 8 employees. Now, fortunately for that business, they've grown, they've thrived, and they now have 16 payroll staff on the books. So their payroll requirements have actually doubled in the last 12 months. And the conversation I had with my fellow Pro Advisor colleague was that they hadn't increased their pricing to this particular client, but this is their time at end of financial year to take stock and to then obviously feed back to that client and to say, hey, the scope has changed, the offering has changed, and therefore the pricing has now changed for what we're offering you as a practice. So looking at doing some more detailed calculations here. So what we want to do here is look at things like our service profitability analysis, client profitability analysis, our staff profitability analysis, and our practice profitability analysis. So all different KPIs and different areas where we can drill in and get financial information in terms of how we are working as a practice. Remembering that this is our time now at end of financial year to take stock and to reflect and to look at pivots that we may need to do in our practice. So I want to talk about some other different areas here now. So we're looking at pricing, costing, profitability. And so we've got our big QBO logo in the middle there. We've got our customer profitability analysis. We've got our regular financial analysis, cost drivers, and key benchmarks there. So one of the things I want to talk about here is within our QuickBooks Online suite, we can add in our products and services. You can see a list there of different products and services. We've got some admin services, BAS services, and we've got CTR, company tax returns. Within that part of our QuickBooks suite, we can actually come in and give those different services different prices. So remembering for different things that we offer within our practice, we're going to offer different service and different charge rates. So the QuickBooks product will allow us to easily classify our revenue into different service levels. It'll help us to structure our revenue reporting and help us to stick to pricing as well. We'll easily be able then to review our current pricing when we're looking at whether we have to do price increases or implementing different changes. So also our structured reporting. So within our QuickBooks products, remember that we're not only in business to look at our clients' P&Ls, our clients' reporting, we need to look at our own reporting. So we have access within our QBO files to prepare structured and detailed complex reporting that will help us to structure our chart of accounts in a way that's going to make it easy for us to analyze our costs. You can see there on the P&L here, we've got our income, but we split it into different areas. We split it into our BAS income, our company tax return income, and then our bookkeeping income. So we're able to identify different income stream levels and different areas of where we're able to generate our income. The same with our costs as well. We can also separate out our fixed costs and our variable costs, and we can use those and allocate those across the different income levels. You can also, within your QuickBooks Online Plus files, determine different location and class and or a combination of areas. But we might have location, and location might not be a physical location. Location might be our company tax returns, our individual tax returns, our BAS tax returns. So remembering that we can use those means within our own QuickBooks platform to categorize our income revenue areas, and also allocate the expenses that are linked to those to give us some really, really good measures and profitability. We can also use sub-accounts as well, if that helps us within our QBO files to allocate different chart of account lines. So looking here at customer profitability analysis. So we're looking here at a particular customer. We're in the projects area of a QBO file, and we can see here within a particular different number of projects, we can see within a BAS project here, we've actually got a negative profit margin. We can see the year-end company tax is generating us a positive profit margin of 45%. This is giving us the ability then to deep dive into those particular areas and have a look at what it is, where the costs are going, and are we undercharging? And so again, when we're talking about having those conversations with our clients about profitability, this is going to give us the means to take those conversations to the next level. We can generate any of this data into a report format so that we can sit with our client, whether it's virtually or face-to-face, and actually have those difficult conversations. And so just looking here at that profitability, the project analysis. So we can see here for this particular project, we're looking at a 45% profit margin. We've got the income there on the big window, the costs as well. But this is all information that we can sit with our client and talk to. It's all information that is going to help us when we're looking at resetting pricing, whether we need to reset pricing, and or if we do, how much we're going to reset that pricing by. So I want to take a minute now to talk about value-based pricing. So we are in an industry where in reality, the majority of us are probably doing a combination of hourly billing or job-based billing and fixed fee billing. Obviously, if we can transition some of those jobs from the hourly billing to fixed fees, it does give us the option to get those incomes in, whether it's on a monthly or quarterly basis and or more often. So what we want to do is look at how we can generate those recurring invoices, whether we need to use a third party to do that, or whether we can do that from our QuickBooks Online accountant suite. So you can see here, there is an invoice that's set up as a recurring invoice. It's been set up as a recurring invoice to go out, and the deadline there, the end date is the 30th of June 2025. And quite often that is what we would do, is set up that recurring invoice to go out to our clients. This is a monthly bookkeeping invoice. It's going out for a full monthly bookkeeping service, and it's going to go out every single month until the end of June 2025, at which time we may be resetting that pricing and then resetting that to go out to our client database. So having a look now at forecasting and benchmarks. So looking here at some different forecasting and benchmarks, and what that is going to do is to give us some deeper revenue insights. It's going to help us to develop and monitor different KPIs. If you've been a part of some of the other end of financial year webinars that we've done, we talked about managing and monitoring some KPIs in our practices, taking anything from 5 to 10 KPIs that we can measure and monitor within our practice to give us those deep insights into how we are doing and areas that we can improve across our practice. So I want to talk now about pricing systems. So what I want to talk about is hourly rates, fixed pricing, and value-based pricing, and what the difference is for all of those for us in practice. And like I said, the reality is that for a lot of us, we're probably using a combination of those. At the end of the day, best practice is probably to get towards that value-based pricing where it doesn't really matter how many hours we're working on a client. It doesn't really matter what the fixed fee is, but what we're offering to our clients is a value proposition. So the client will pay us for that value proposition, regardless of whether we're spending anything from 1 hour to 10 hours, but they will pay us for the engagement because they see the value in that service that we're offering them. So looking now at some more detailed calculations. So hourly rates. So we want to ensure that we're getting a return on investment for our wages. If you do have staff in your practice, you do need to be getting a return on investment. We spend so long in our businesses making sure that our clients are getting a return on investment and that our clients are successful. We need to do that as well in our practices. It's ideal for charging an hourly rate when the scope is unknown. So it's a new client. We're not quite sure what we have to offer. We're not quite sure what they want from us. So it's a great idea to charge them an hourly rate because we don't know whether this job might be a 1 hour or a 10 hour or a 15 or 20 hour job. It may not be ideal for everyday services. So where we do have those clients who come to us every week for payroll or every month for IAS or for monthly BAS. So let's see if we can get them onto some sort of value-based or cost-plus-based pricing. And we've got a comment here that cost-plus pricing is more prevalent than value-based pricing in nearly 3 in 5 of 58% Australian accounting firms. So an interesting little insight there. So fixed pricing. So what we would need there then is to have a menu of services, to have a list of our services so that our clients, whether it's on our website or they get the information from us directly, but they're able to actually have a look at what our pricing is on a fixed base. It can be ideal for a majority of everyday services. So if we do put that fixed price there for a basic individual tax return, and we've got that cap there, for example, or for a basic BAS return, it can give certainty to our clients. So our clients are under pressure. We do have cost of living crisis. Our clients have got cost pressures. So if our client knows that they can come to us and we will charge them X for the BAS, then it gives them that certainty and they know what they need to plan in terms of being able to pay us for those services. So driving our practice efficiency and effectiveness. So if we've got those fixed pricing, we can do that. We can be efficient and effective in offering those services. And so we talked a little bit about value pricing. So value-based pricing, what we're talking here about is those high-end advisory services. And so those services where it is really hard to put a fixed fee on them because we are talking about value. We're talking about all the time we've spent training and understanding and giving us the insights and analysis that we can feed back and give to our clients. It's of great significant importance, and it's a really big value add to our clients. So if you can offer in some value added pricing, and when I talk about value pricing, I'm really talking about those advisory services, like I said, where it's hard to put a dollar value on it, but there are so many different advisory services that we can offer our clients within our client database. So looking here at a little bit of a breakup. So in terms of 2024, 2025, so looking at a turnover of $550,000. So just as sort of a benchmark, if we were looking at that as a required turnover, we would then be looking at an hourly rate or a value added work of $50,000 against that. Leading on from that, fixed price non-group individual tax returns, $50,000 from that level of revenue. And then looking at fixed price client groups, if we've got 90 client groups at $5,000 each per client group. So that might bring us $450,000 of revenue. And so as a little breakdown there, that could be for BAS returns, FBT, annual financial statements, and individual tax returns. Tax planning, FBT, annual financial statements, and tax return. And so the comment there down the bottom, the median annual revenue per client, $3,500 per client across accounting firms in Australia. So it's incredibly obviously median, as it says, a statistic, but interesting a statistic for us to reflect on as practitioners. So what is our median price per client? Are you below that? Are you above that? And again, that would depend on the size of your practice, the number of clients you have, the number of staff you have on your books, etc. So let's look at some effective end of financial year planning. And so let's look in terms of 2024-25 that we're just about to finish off. Let's look at some things that we should do right now as soon as we can. So we want to be able to prepare our 2025-2026 budgets. And it seems crazy that we're so close to the 2025-26, but let's set some budgets within our practices. Let's prepare our 2025-2026 pricing and our menu of services. So as much as you can, I would encourage you to document and get some of those services detailed and down with some pricing. And that pricing should be the minimum charge. So remembering that we're charging on a worst case scenario basis, if that makes sense. Let's review the client services. Let's prepare quotes and re-engage. So let's have a look at what services we're offering clients. Do we need to do new quotes? Are we re-engaging clients? Are we disengaging clients at this point in time? Are we offering new services that we haven't previously offered? So have we done different pivots in the last 12 months and we want to offer clients new services? We need to discuss quotes with our clients. So if we are re-quoting clients or wanting to re-engage clients, but at a different price point, now is the time to let them know that that is what we're doing. And the other thing here, which I think is really, really important, and we've talked about this in different webinars, but it is the disengaging of non-ideal and non-profitable clients. So please remember, within our practices, we don't need to keep clients. We don't need to have clients who cause us stress, who don't make us money, who compromise our professional or ethical values. So we don't have any obligation to keep those clients. And the end of financial year could be a really, really good time to disengage those clients and to actually pivot forward to the type of ideal clients that we want to have within our practice. So let's have a talk then about communicating pricing changes to our clients. And so what I love here about this slide is that what I'm saying here is our ideal clients will understand. It sounds quite idealistic. I would love to think that every ideal client would understand. But what we do want to do is prepare those new proposals and new quotes. We want to explain the changes. So it might be that part of the explanation is that it's been a while since you've had a last price increase. I know from talking to a lot of my pro advisor peers, a lot of us haven't increased pricing for a number of years. And some of us, for our monthly billing clients, have been absorbing software subscription increases. So a really, really good time to talk to clients and tell them that's what we've been doing. We haven't increased pricing and now we do need to. Tell them that we haven't been charging for the service. So do you understand that we've offered you this additional advisory service on a monthly basis or a quarterly basis, and we've not yet charged you for that? We can also let them know that our business costs have increased. So the subscriptions that we are holding as advisors have increased over the past 12 or previous month periods. And also that the volume of work has changed. So again, like I said, I was talking to an advisor who has been working with a client an engineering client who had 8 employees when they were engaged with this pro advisor. And within the last 12 months, this engineer now has 16 employees. And it's fantastic that the client has had that much growth in their business, but it's a time for that pro advisor to take stock and to then look at the volume of work they're doing. They're now doing double the payroll services, let alone the additional bookkeeping, etc., on the back end. What we do want to do when we're talking about any of these things is we want to personalize the communication. And so we live in a world where we can SMS, we can text, we can Slack, we can communicate via various online channels. But I think it's really important where we're looking at our clients and clients that we want to keep on our database, and we want to talk to them about different changes here. Let's make it personal. Let's set up a meeting. Make that a face-to-face if you can. Or let's make it a virtual, but let's set the time aside where it is a one-on-one virtual or face-to-face meeting or a phone call or an email. But let's give our clients that personal time that we sit down and talk to them about these changes and about why the pricing is changing. So I want to point out now some industry benchmark reports. So on the slide here, you'll see some different reports that you can go away and Google, get access to. They'll give you access to different pricing guides, different trends, different industry benchmarks, etc. And so that gives us a really good, particularly if you're working in a small practice and you're not really sure what your peers are doing, jump on and have a look at one or multiple of these benchmark reports, and it'll give you a great resource as to what it is that your peers are doing out there in the industry. So I want to now put it out to you on the call here today. So what are 3 top repricing strategies that you could be looking at? And I'm going to also mention here right now is using our AI as a friend. So using the AI where you need to have those difficult conversations with clients about pricing, where you need to have that conversation about engaging or re-engaging. So use the resources that we've got at our fingertips in terms of helping you have those conversations. So when we're looking at repricing here, like we've talked about in our session today, it could be that we've been offering services that we haven't actually charged for because they've become part of that sort of scope creep kind of service. It could be that's a new service that we've added throughout the last financial year, and so therefore we haven't priced it appropriately. And I know in my network, I've got a particular colleague who is a BAS agent, but who's about to get their tax agent license. And so they're about to launch into offering tax services. And so again, they haven't previously been charging for that because they haven't been able to offer that as a service. But a lot of different things to think about. And again, what we would like to do with this end of financial year series, this workload to workflow, is just to take that little pause, to take that stock and to look at what little things we can do differently in our practice to help us work that little bit smarter, not harder. I'm going to refer you now to the end of financial year hub. So there is a QR code on the screen here now that you can see. So a lot of different things you're going to get from the end of financial year hub. You're going to get productivity tips and hacks. And who doesn't love a good tip or hack? You'll get some end of financial year checklists. You'll get access to some webinars that will cover things like processes, KPIs, processing, and more. And you'll also get access to virtual training sessions for accountants, for bookkeepers, and for payroll professionals. So please either visit that HTTP URL link there or scan that QR code there and access that area. And so again, join me please for the rest of the Workload to Workflow series. We've covered things in this series like measuring what matters, fees, pricing, and profitability, and having client conversations done differently. So please scan the QR code here to get access to these webinars on demand. So I'm now going to talk through some Q&A that have come in throughout this session. So I've got one question, which is, what do we do where we want to reset our prices, but the clients don't want to accept a higher price? And look, I think this is a question that a lot of us as advisors would have and would have dealt with. It becomes part of those difficult client conversations. And I think it is perhaps quite a fluid answer in terms of who the client is, whether you want to keep the client's business, whether it's a time that you say to the client, here's the grey line in the sand, and this is the price. If you can't afford the new price, you may need to use a different accountant for services. I've got another question here, which is about, should we charge different rates for different services depending on where we are located? So that's a really interesting question. And I'll be honest, I used to think that being based in South Australia, that perhaps I should have a cheaper rate of pricing for services because I'm not paying quite the same, maybe rents, etc., that some of my eastern state suburb colleagues may be doing for rental areas there. What I will say now is that at the end of the day, it really doesn't matter where we are based. We really need to, as a cohort, be looking at what we're offering to our clients. And it really doesn't matter whether I'm offering those services from South Australia or whether you're offering them from Sydney, the CBD. it really shouldn't matter what rent you're paying for your office or what I'm paying for my office in South Australia. So I think it's important that we do take stock at this point in time at the value that we're able to offer as practitioners, and that we take a look at what it is we've done to get to this point that we're able to offer these services. It's a lot more than just preparing that BAS. As we know, it's not just about the BAS, it's about the years that we've spent getting qualified, getting educated, our continuing CPD, etc. So yeah, I think, but I think those industry benchmarks a few slides back on our presentation would give you some insights as well into what different people there are charging. So I would like to thank you for being with me on the session today. I'm going to hand back now to Christine, who is going to close out our webinar today. Thank you.
Well, that brings us to the end of our session, fees, pricing, and profitability. What a fantastic session. A huge thank you to the incredible Emma Fabbro for her invaluable insights. We hope you're leaving with a clearer understanding of how to optimize your financial strategies. Emma gave us some practical and actionable advice you can implement right away, whether it's reviewing your fee structures, reevaluating your pricing, or identifying new avenues for profit. Today's knowledge will help you make smarter business decisions. We appreciate you joining us. If you'd like to revisit any part of today's webinar, a recording will be sent to your inbox within the next 24 hours. Thank you again for being with us, and we look forward to seeing you at our next webinar. Thank you. Bye.